All right, guys. So, a lot to do today. I'm starting a couple minutes early just because I want to get a jump on it. We've got Alphabet earnings. We'll be going over that. Uh, that happens in about a half an hour, 32 minutes. So, I'm going to try and get through the full macro view of everything that's going on and maybe hit on a couple of different subjects real quick. So, I probably won't be focused on comments for the first 30 minutes. I'm just going to try and rock and roll through this so that we have time. And then, if we get a little bit of time before the earnings, great. If you guys see the ticker in the bottom left corner start to move up and down really volatilely for Google, let me know. That'll let me know earnings are out and I'll try and grab it. But without further ado, let's rock and roll. I wanted to thank the 14 people that have signed up and joined this channel in the last 24 hours and the 1,216 that are here. You guys are awesome. I really appreciate you. All right. So not finally done yet, but probably up about 40 grand today, maybe 35. Tesla made up 64,000 of that. Thank you, Tesla, for keeping my account green. Very nice to have Tesla be such a strong player. Can't hate that at all, right? And then Flux was up 2.58% today. I think that's about it. Those are the big players. ETH was up 0.18%. Everything else was down. I did do some buying, though. I did some dip buying. We'll talk about that actually right now. So I sold all my NVIDIA. That didn't last long, right? I just used that as cash. I'm sorry. But I do want to acquire more. I just wanted it for cash. So I bought RG 2026 calls, a decent chunk of those. I bought Cypher. I bought CleanSpark today. I even bought some SoFi 2025s just because I think that the chance of them getting to 12 is really high. Potentially, by Q2, maybe the start of Q3, and that would get me close enough to where I could make some decent gains. And I would sell out of those pretty quickly if I got a large move. Now I also, again, I sold 2% of my Tesla position today. It was up 60% in the last 2 days, and I bought PayPal January 2026 calls down 10% on the day. So I've just been doing some shifting and moving. And again, you can't hate when you're up on the day. You can't, not when a market's red. Now, real quickly, yeah, we can look at all that. It'll just come a little bit later. So the shitcoin portfolio sitting at about 261, down on the day. Not really worried about it. Don't really care. It'll come back. And Bonk actually did really good today. Well, I guess it's only, yeah, I don't know. Last time I checked, it was like up 15%, so doing really good. Not much to say there. Moving on. Stock heat map. Lots of red, especially in the S&P, the larger cap stuff. So when we're just looking here, you can see how brutal it was. Tesla up 5%, NVIDIA up 3.7. A great day if you own true AI plays, I would say. A great day. Again, shitcoins, heat map looks okay, but if we look at it over the week, it looks a lot better. So you can still see that we're risk on in the markets right now. We're risk on even though the greed index has us at 40 right now, still well in fear. I would say that the market is still being very, very resilient right now. Real quickly, actually before the DXY and all this stuff, I don't know why this isn't already loaded. Sorry, I apologize about that. I'm trying to be fast, and I'm not. Real quickly here. So S&P down 0.46% on the day. Nothing too crazy to report here. It looks fine. I don't see anything technically that's bad at all. I think tomorrow, if we get, I don't know, a decent read on PCE and maybe some revisions down for previous months, I think that could help as well. And we're going to talk about some of the data that came out and the economic data here in a second, guys. And again, we're balancing that with the conference call for Google, so we're doing a lot. All right, so today, actually, we're still sitting good. We're sitting above the 100 moving average on the NASDAQ. I don't hate this positioning, only down 0.55%. Not bad, very close to the S&P actually, which shows that the NASDAQ was actually being pretty resilient today. Real fast. The Russell 2000. How did we do Russell? Russell is down 0.72. Again, very much in line. These were all really tight, still above the 200 moving average. We'll have to see what tomorrow brings. Tomorrow is going to be another big day on the economic story. The dollar down 0.23% today. So again, just chopping like we want it. I love it. It's good. And the oil actually is starting to try and push higher again. I don't think it's going to last. We'll see if I'm wrong. The only thing I'm really worried about right now, guys, in regard to, there's this big question about stagflation. And the only thing I'm worried about in regard to any potential for stagflation would be war or massive tariffs, a massive tariff war or kinetic war with China. That's it, and it's with China. If those things don't happen in the near term, and I think we're all going to play nice for a while at least, then I'm not worried about stagflation one fucking bit because they're exporting deflation like crazy. Hey, oh, I guess I got to pull up Google. Google isn't Meta. Google isn't Meta, guys. Holy shit. We're running. We're running. Let me just move this down here. Up 4%. See if it goes any higher. All right, so let's pull that up real quick. We'll get back to the rest of this stuff in a second. We're just going to take a look over here and see what we got, if it's available to me yet. Let me do this shift refresh. It does not show up for me. So it's running. Somebody's got the data. Let me go over here real fast. Just see if I can find it. Oh, let me see. Latest. Goog. Seven seconds. All right, I can't read that language. If anybody's got the numbers, throw them in the chat. All right, I'm going back to top. Come on, guys. Where are the numbers at? Let me go back over here real quick, see if I can refresh. I wonder, let me make sure they don't have it under anything else. April 2020 or April 10th. Nope. Events. Nope. Earnings. Nope. Hard reset. Nope. All right. I hate that shit. I hate it. I hate it when you can't just get it. I want the earnings. Give them to me. Let me try this. Let me try with the L. Just in case. Oh, there we go. Kingdom Sounds. EPS 189, beating expectations of 150 revenue. Ex-TAC of 80.5 billion, beating expectations of 78.7 billion total. Revenue 93.5 billion, beating expectations of 91. And they are up 11%. We're doing an inverse meta, guys. This is looking more Tesla than it's looking Meta. This will be good for markets tomorrow. Can't hate it. All right, I'll check back in a second. Sometimes I don't know why. Some people get express access. If you guys know of a quicker way to be able to get these without having to pay for a Bloomberg terminal, let me know. Down the road, I might get a Bloomberg terminal, but I'm probably not doing it right now. All right, so let me just jump to a few other things and we'll get back to that. Let's finish up the macro. So again, oil creeped up a little bit today. Don't like to see it. Dollar down. I like to see that. Gold tried to creep up a little bit, 0.78%. That means it's up a whole 21% in 13 and a half years. Yay. Pathetic. And then the MOVE index was flat on the day. The bond market, the 2-year tried to get over 5. I don't know if it ended up there. Let's just see real quickly. I know everybody was worried about the beginning of the day. Everybody forgot about it later in the day. It's funny how that stuff works. No, that's not the 2-year. What the fuck is that? Oh, whatever. Let me just go over to here. Let me see if I can find it. 2-year. Oh, maybe it was there. 10-year, 2-year, 2. Okay, there we go. 4.99. So again, it closed underneath the 5% mark. That's what we want to see. That's good stuff. Real quickly, I'm just going to, before I do a Tom Lee video, I'm just going to check and see if I got the finance. Oh, I do. Here we go. Let's go in. Let's take a look. So we're up, what are we up now? We're up 12.5%. Can't hate that number. It looks like we just have the financials. Let me zoom in. Mountain Views, and here our results in the first quarter reflect strong performance from search and YouTube and cloud. We're well underway with our Gemini era, and there's great momentum across the company. Our leadership in AI research and infrastructure and our global product footprint position will position us well for the next wave of AI innovation. Ruth Parat, President, Chief Investment Officer, CFO, said our strong financial results for the first quarter reflect revenue strength across the company and ongoing efforts to durably re-engineer our cost base. We delivered revenues of 80.5. We already saw some of that unaudited. These are just, we already got the highlights from this. I'm going to skip this for now. I want the real juicy stuff here. I want the PDF. I want the PDF. I want our slide deck. So we'll skip that. And again, Alejandro will be refreshing this too. So we'll have updated visual representation of all the numbers when we go over this in a little bit. So I think we're going to skip this for now. We'll come back to it. We're up 13% now on Google. This is going to be really good for markets heading into tomorrow. We want to see the largest of caps doing really well. Meta was just self-inflicted, right? Like that was self-inflicted. He talked about spending a shit ton of money, and people didn't like that. He could have sold the call better. But again, Meta actually bounced back pretty good, so that's not too bad either. Now, real quickly, we're going to listen to Tom Lee. He's going to be talking about the PCE and some of the data and what he thinks of with inflation and just his thesis. Let's listen to that real quick, and then we'll get into economic data. And then when we get the good stuff with Google, we'll bounce back over.
Tom Lee and Joe. Tom, I'll start with you. Honestly, I don't think enough is attention's to this capital gains proposal we got last night. I think that might be sprinkled in here. But anyway, GDP's getting all the attention. Steve laid it out nicely. What is your take?
I agree with Steve's point. You know, the GDP number did catch people off guard, the core price index being basically a hot number, 2.9 year over year. But it is going to come down to the revisions, which everyone expects. I think there's also now a disconnect between the CPI numbers we're seeing and like what we hear from companies or even, consumer surveys. I mean, for instance, in just this first quarter earnings season, the mentions of inflation as a problem is now at the lowest level since the first quarter of 2021.
I'm sorry, just real quickly. You've got to listen to that, right? He said that I'm getting balloons again. I don't even know how the fuck I did that. Anyway, he said that the mentions of inflation in these reports, these quarterly reports, are at the lowest level since 2021. So again, doesn't really correlate with some of the data that we've been seeing recently. It's a very important thing to note.
So it makes me wonder how is inflation accelerating when fewer companies are even mentioning it as a problem in the first quarter? I think that there are catalysts, in the next couple of weeks. I mean, the first one, of course, is tomorrow to see really what March inflation.
Oh, I just saw the chat. So Google's paying its first dividend ever. Not surprising at all with as much money as they have. They should be. And that's a brilliant move. Between that and stock buybacks, it will just keep driving this thing higher.
Looks like. But I think the earnings backdrop has actually been very supportive. 80% of companies are beating. So as painful as
Well, if that's true, C-List, then we're not going to have any more fucking balloons for a while.
the last couple of days have been, and really the last couple of weeks, I actually think it's the risk reward's positive here.
I agree. I think the risk reward is positive. I'm going to wait and see what the PCE revisions look like. And again, we'll get the March data here tomorrow. We just got the quarter over quarter.
So the firm landing is here, in my opinion. We did hear,
Google is 14%.
we did hear from Whirlpool. We did hear from Harley Davidson that they are having difficulty passing through rising input costs to the consumer.
This guy's an idiot. I'm going to jump
and that's
past.
not a bad thing. In fact, if you look at the price action today, right now, where we are in the market,
Actually, you know what?
we have recovered everything that we lost
skip them. 1 second.
after the GDP print and after the inflation figures were released. So we've recovered it all. This is really where we sit in the marketplace right now off of Meta and the spending that's attributed to Meta. I think that the rest of the world is experiencing a disinflationary trend that ultimately is going to get exported here to the United States for buying equities in 2020. We're actually higher.
Joe, and John, jump in on this. Can we just remember the Super Bowl with the Falcons and the Patriots, and
Sure
the
do.
Falcons are up like 100-0 at halftime.
28-3.
Whatever.
Sorry, I'm going to have to
Brady
edit
comes back
these in
and
the
wins.
future.
Can
Some
we
of
all
this
just
commentary is
acknowledge
just
that the stock
fucking
market
stupid.
is up this week.
No balloons
Even with
for 2
today,
more
we're
minutes.
still higher for the week. We're only like 1% or 2% off all-time highs. Market has one big down day.
Profit margins are strong.
NVIDIA's,
Everyone wants to
NVIDIA's running
focus
too.
on
Awesome.
the economic recession that never happened. The real recession that happened that matters most
Sorry
is
for the
the
screen.
earnings recession. And we've come out of the earnings recession in the second half of 2023 for the S&P and the NASDAQ.
The numbers tonight.
There we go.
Then what?
Back to
Because
time.
Meta kind of did.
Yeah, I mean, Meta was up 40% into the earnings report, so I think expectations were high. I think there has been sort of a reset, so I think there's if it's a beat, we could see stocks rewarded. And overall, it has been a good earnings season. 80% of companies are beating, and if you really exclude
80% of companies are beating earnings. There's not a lot of people that tell you this kind of stuff.
energy, you're really pushing up against double-digit earnings growth year over year.
Double-digit earnings growth year over year. How many people talk about this? Anybody? Bueller?
So it's exactly what Joe was saying. Been a pretty nice earnings recovery. And I think as you get into the second half of this year, healthcare no longer has negative year-over-year comp. So, you could be back into mid-teens earnings growth. So I think the earnings backdrop's really supportive, and there's still $6 trillion of cash on the sidelines.
So we get we get some good numbers tonight. Well, more importantly, Tom, I think good
All right, I can't stand anymore. Let me just see if Tom's in any more of this.
guidance, right? Not to forget about the backwards. We want the forwards looking. That's good.
I think it's reaccelerating, and I think the March CPI kind of fueled that narrative. So maybe April is really the tiebreaker, and that's not for a couple weeks, but it's also doesn't mean you have to wait forever to get some idea what's going on.
All right, it's Tom Lee. Very different backdrop, though, than a month ago. Tom, we really appreciate your views. Thank you very much.
Yeah, they want to kick him in the ribs. I love his lazy eye. Anyway, love you, Tom. You the man. All right, so we've got 17 minutes until the earnings call. We will go over the PDF and some of the visual imagery of what they have. We should have visual stocks updated here shortly, so we'll be going over that too. Real quickly, though, I want to go over some of the economic data. GDP growth rate, quarter over quarter, and price were the big shockers for the day. Growth rate was slower than expected. It was 1.6. They expected 2.3, so that sucks. And then price was a little bit higher. But these are quarter over quarter, so this is including January, February, and March. So we've had some mixed results with pricing data on the latter part of Q1. So it'll be interesting to see how some of this stuff plays out. I'm in agreement with Tom. I want to see what happens with April data and go from there. Initial jobless claims lower than expected, but again, there's so much bullshit in this data. Wholesale inventories were down. That's actually a positive. They were lower than expected. We don't mind if inventories go lower because that means that we need to build out more, right? It means things are selling off the shelf. We don't hate that. And again, retail inventories ex auto was down 0.1%. So core PCE prices again up 3.7 over versus 3 and 3.4 for consensus and forecast. Not great looking, but again, it's for the entire quarter. So we might have a jump in March. We'll see. But we really need the revision data too. So I'm going to hold off making any decisions till April. I agree with Tom. We've heard the lowest amount of CEOs talking about inflation being a problem in any way on these conference calls since we've seen in 2021. So I'm going to stick more with what we know from the real world, not heavily manipulated government data. I don't even know what the game plan is for half this stuff. And I'm not saying it's way off base. You compare our stuff to China and it's beautiful, but I just don't know how reliable some of it is. And then it's past looking, right? Like we're looking at Q1, which is, going all the way back to the beginning of January. So we're gonna wait. We're gonna see what happens here tomorrow with core PCE for the month of March, personal income, personal spending, the price index. We get Michigan data. So tomorrow should be a fun day. And then we get industrial profits for China. I actually think those will go up because China's doing everything they can to prop up their economy. And then we have a quiet start to next week. So that's it for that. Real quickly here. Don't worry, we're still going to get to the other stuff. All right, from, again, the macro standpoint, my friend Seth put up, of all 13 bull markets since World War II, this is the worst 18-month performance for the small cap cohort. Yes, it's good that 80% are beating estimates. Yes, and almost double digit if you didn't include like energy that was, going up over that time. But yeah, so what he's saying here is small caps have to play a catch-up game, and that coincides very closely to what Tom Lee is thinking is happening, and I agree with both of these guys. Let me see what else I got for you here. I already talked about that, and that's already done. Let's move on. The Fed Watch tool, so it took a hit today with higher prices in the PCE and then lower performance in GDP, and everybody wanted to talk about stagflation. We're down to a 1-to-2 ratio for a rate cut in July. So again, it's dropping in July too. I think that's going to change with data that's coming out in the next couple of months. And if I'm a monkey's uncle, I will accept that. But I do think that's what's happening. Oh, real quickly, I do want to talk to something else. Maybe I didn't talk to this part right here. So another post from Seth, he was talking about everybody talking about stagflation. So this was off of something I said it's idiotic. Somebody asked me about stagflation. I said it's idiotic to think that we're in stagflation, but it could be a narrative for a few weeks. Seth said, stagflation is often a term used by those without patience, a disinflationary cycle that finds an initial trough and before the ROC once again provides beneficial base effects, simply takes an element of time. No such thing as stagflation, just a funny word. I mean, I actually would say that there is a such thing as stagflation. It can occur when you have massive energy issues like you had in the 70s, right? Like then you can go through a period of stagflation when energy costs are going up exponentially and like almost 10x in some cases for a period of time. And that can cause all kinds of problems because again, the high base cost just fucks you up. So again, I don't think stagflation is real. I don't think it's coming. All right, real quickly. So this is a chart representing gold for China and the amount of growth they've seen. This is from Kobayashi letter. Pretty bearish person, I'd say, all in all. But he says, what is happening in China? Gold trading volume in China is now 400% larger than the average seen in 2023. Here's what's happening. They're starting an economic collapse. And I say starting because it takes a long time. It could take years, right? It could take maybe 2 years is my guess, maybe a little bit less. But the malaise behind them is really, really bad. And you can tell it in the price of gold. It like gold isn't trading by 400% more here. If anything, the volume is lower than it should be because of Bitcoin, right? But here's what I wanted to post here. These guys don't have access to Bitcoin in the Hong Kong market. And I know some people argue that the mainlanders and Chinese and in China can't get access to Hong Kong, but my view is starting to change on that, and I think they can. At least some of the rich ones, the ones that do business overseas, they can get their money out. And so I don't know for how long, but I do think that they'll end up using this ETF, and that should be very interesting. I don't know if you guys can see this on Google's chart, but what the hell just happened? Look at that. Somebody did something, dude. I don't know. That's crazy. Look at that. This thing was up to 179 in after hours, and it dumped in a minute down to 154. I don't know what just happened, but that's insane. We're going to keep an eye on that. All right, so let's keep going here. We got a few minutes. We'll get our review in of some of the earnings stuff before we jump into the rest. All right. I just wanted to clarify this. Somebody asked me if I thought a miner was going to have a good quarter for Q1 results and whether or not they should sell before it. First off, I'm not a financial advisor. I'm just some high school dropout who works in his basement and retired a bunch of years ago. But I don't think any of these guys that hold Bitcoin are going to have a bad quarter because Bitcoin was at $71,000 at the end of Q1. So remember that. Remember that FASB accounting rules apply. If you've got a Cypher, if you've got a CleanSpark, if you've got a MicroStrategy, if you've got a Mara, they benefit greatly from all that. All right, real quickly, Square is doing a bunch of stuff with Bitcoin. The Bitcoin narrative is going to grow behind Square. I might end up picking up more Square. I feel underallocated at this point, but I made a bunch off of them, right? So that's why I sold it. But it says Jack Dorsey's block now allows millions of sellers using Square to automatically convert up to 10% of daily sales into Bitcoin using Cash App. That's interesting. That's kind of cool. Then you have him saying, we're building a mining rig. So they're working on their own mining rig with 3 nanometer technology. That's kind of interesting and fascinating. Let me fix this real quick. Sorry about that. So that's cool. And then also a friend posted here. He said, Thomas said, GBTC held 46% of all the Bitcoin held in ETFs a few months ago. Today it's 36%. The market, we're getting ready to see a flippening where BlackRock will hold more. Says the market needs their selling to sustain prices under 100,000. Soon enough, GBTC will plug the leak and stop the outflows. If not, they simply run out of Bitcoin to sell. They actually probably will plug the leak because they're looking at making it to where they can lower it down and basically give somebody lower fees and or like some kind of return, almost like a dividend, so that they can avoid the flow out because they've lost 50% of their Bitcoin, right? It sucks. All right, real quickly, we're almost back, guys. I wanted to point out Tesla, okay? I told you it's going to break out more. We might go to the 175 to 185 range very quickly. I just want to point out that we're doing that, and I was fucking right. And we're up 6.5% today. Not a bad number. I probably made $100,000 off of Tesla today. Real quickly here, let me go back over. I want to show a few other things. Gergevin, he took a ride in a Tesla. He saw that it could have a Cybertruck. He saw that he can have trading view on it. Now he wants one. There's going to be a lot of that, guys. I'm going to show you something like that in a second here. My friend Dalton posted Tesla's ultimate moat is their speed of innovation. This was made clear on their Q1 earnings call yesterday and will be evident more by 8/8 with the Robotaxi reveal. Their speed of innovation was always the thing that you were investing in. I'm going to skip this one. Don't have time. I had a power outage this morning, and people were like, "Oh, hey, you should get a Powerwall or something." And I said, "I won't need one. I'm gonna have a Cybertruck. My Cybertruck will have power share, and it will be the equivalent to 2 to 3 Powerwalls. I just get it with my fucking truck, guys. Does that seem cool?" Now, Ron Barron said Tesla's going up huge from here. He said it could go up 70 to 80% a year for the next couple of years. I think he's too bearish, but I think those are great numbers, and I'd be happy with it. I can make a couple mil off of that. And again, I think you need to be paying attention to one of the most brilliant investors out there. This man saw the vision for SpaceX and Tesla, and he never let go. The Great Awakening. I wanted to show you guys this. Okay, so, and then we'll get to get back to Google. So this is Tesla full self-driving search terms over time, over 2004 to present. It's exploding. And this isn't the only thing exploding. Search terms for the Y, the S, the X, the 3, the Cybertruck. Everything is exploding for Tesla right now. So pay attention. Pay attention. Ignore stupid fucking noise from stupid fucking people. No balloons for 2 more minutes. All right, it looks like I don't have a PDF yet. Let me see. I don't know if we're going to be up over here. All right, did Google just report something? They have. They reported a bunch of beats across the board, triple beat. And we're going to be pulling up some of their visual representation in a second. I'm just checking. I don't know if we're updated. It usually takes like, I think, 10 minutes to get this stuff updated on here. So let me see. Yeah, no, we still have Q4. So it might be just a little bit longer before we get Google data updated. So we'll come back to that on here. I could read the earnings release, but it just bores the shit out of me. It's just like, there's just nothing entertaining here. It's just the financials. I like the visual form. I don't think it's a good view. So we're going to skip that for now. We'll come back to it in a second. We have 5 minutes, and then the conference call will start, and then we'll jump into that. Maybe the slides get released at that time. They probably do. I'll get access to the deck, and I can start pulling that stuff up as the conference call takes off. So we'll get there. SEC suing MetaMask now. Oh yeah, I believe it. They're probably gonna tighten a lot of non-controlled areas where they don't have clear KYC and AML, right? Anti-money laundering and know your customer. That's just a given. But they do love Bitcoin and they love stable coins as long as they can control them, because it actually just increases their power in a new economic system. I mean, it really increases Bitcoin's power, but it helps them maintain theirs, right? So we're okay with that. We don't care. And I don't know. I heard some people are getting bullish on Bitcoin and crypto. That's fucking insane. I get that if you're not diversified, it can hurt, right? But there's a reason we do this, guys. There's a reason we diversify our holdings. I don't even know if I'm at the final number today, but I'm probably up close to $100,000 today on just Tesla. And so when you have days where, Cypher and CleanSpark can go down like 7-8%, and these things happen, you just buy them with the other stuff that's really performing well, right? I bought PayPal today because it was getting butchered. My calls for that were down like 10-11%. Now they're down 4%. So if you're diversified, you can ignore the noise better, especially if you got it pointing in different directions where some might do better than others, like right now with Tesla. And so you feed the ones that are hurting that you have tons of confidence in, and then you chip away from maybe lower confidence plays that don't have a multiplier beta behind them, and you can kind of use them as cash, like what I did with NVIDIA today. That would at least be my advice if I was a financial advisor, but of course, I am not. I'm just a guy doing this for entertainment purposes only. But yeah, and guys, if you could, before we get started on the conference call, we're going to get back over to that now. Can you please if we have 400 people in here, I would love to see that many likes. It takes effort to keep track of what's going on in the markets, and it takes effort to be able to put that out to you guys. And it's really helpful when you pump the likes and you comment. Snap was up 26%. That stock is so fucked half the time that it doesn't surprise me that they had a bounce. We could look at their earnings maybe after all of this. Yeah, thank you, Pietro. Am I saying that right? Pedro? It's not Pedro. Pietro? Anyway, I'm so bad with names, especially overseas. I'm so bad. But yeah, thank you very much, man. If you guys could do the same and you could punch the likes, I really appreciate it. I'm going to just mute this and make sure that we're... Oh, no, don't want to go there. Don't want to go back. We don't need to hear about China. What is this? Alphabet. This is the... Stay tuned for Alphabet earnings call, it says. Am I getting a commercial? How the fuck am I getting a commercial? Oh, is this just their Google products? Ah, maybe it is. Let me see. As long as there's no music. Let me see if I can play this. Can you guys hear anything? This is playing. 1 second. Weird. They don't even have volume. Dumb. Oh, what are we doing here? Where is your volume? I know, I don't... Do you hear me? Oh, shit. Is my mic? What are they doing? Oh, I got it. 1 sec, guys. I got it.
In 2 minutes to spot and fix bugs. It can translate from code to code and is one step closer to speaking 1,000 languages, even where.
I don't know if I'm going to get copyrighted for that stuff, so I'm just going to keep the volume off for now until we get something more interesting. Let me see here.
Prevent vision loss, predicts weather.
Now you hear everything. Yeah, I won't, like, we'll just have to read it because I don't want to get copyrighted for this stupid fucking thing because they're playing some music. I wish they'd skip the tunes and just show us something. Music fades. Are we done with the music? Nope, I can't even do that because that could copyright me too. All right, cool. We'll just hang for a second. They should be on in like 50 seconds. Yeah, right? Isn't that funny? They'll copyright me the shit with their own and then keep revenue, right? That is brilliant. You got to love that. Sealess, I don't want to use the same phone apps that people with annoying fingernails use. Bring back nerdy Google, please. That is a comment. Oh, you guys are great. Sorry, Jesse. Had to downgrade from Whale, but will receive. Oh, no worries, dude. Doesn't matter. Hey, man, $3 a month is cheaper. So anybody who can do more than that and is willing to do more than that, that's freaking great. But you don't have to, man. Just like $3 is a lot. Nope, nothing yet. Okay, come on, Google. Let me go back over here. I want to see if we got this refreshed yet and have our data. Takes a little bit to pump all that data in. Nope, we're still doing Q4. That's fine. Let me see if the slides are here yet. No PDF. Okay, okay. All right, we'll just wait on them. Let me see. Can I just do this? No? Okay. 1 sec here. Okay, still there. Andy, hey, what's up, bud? Thank you for joining, my friend. Appreciate you guys. We're just waiting right now. We're just chatting. Like I said earlier, I think I'm actually super excited. Oh, you know what we should do real quick? Let's do this. Let's do this. Let's look over here at the watch list and see how things are doing. Can I see these after hours, though? I probably can't. Not in here. I know we were looking at Tesla. Let's look at NVIDIA after hours, too. Up 1.59%. There's probably just a bunch of them doing really good in after hours, guys. You sold Google to buy Tesla pre-earnings,
Welcome,
Rob
everyone.
Peter to PayPal.
Thank you for standing by for the
All right,
Alphabet
that works,
first
though.
quarter 2024 earnings conference call.
That ain't bad.
At this time,
Especially
all
if you bought
participants are
options.
in a listen-only mode.
Music is very loud and
After
you're
the
quiet.
speaker presentation, there will
Quiet
be
in
a question and
comparison.
answer session.
I'm quiet?
To ask a question during the
That's the first.
session, you will need to press star 1 on your telephone.
Let's see here.
I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's
All right, I'm going to try and
First Quarter
balance the music here in a
2024 earnings
second
conference call. With us today are
to
Sundar
see how we can
Pichai,
do here.
Philip Schindler,
Just give
and
me a
Ruth
sec.
Porat. Now, I'll quickly cover the safe
Let me see if
harbor.
they're actually.
Some of the statements that we make today
Oh, here we go.
regarding our
We're
business,
starting.
operations, and financial performance may be
Let me know
considered
if-
forward-looking.
Let me know if it's still
Such
too loud.
statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. It was a great quarter led by strong performance from Search, YouTube, and Cloud. Today, I want to share how we are thinking about the business and the opportunity more broadly. Of course, that's heavily focused on AI and Search. Then I'll take you through some highlights from the quarter in Cloud, YouTube, and beyond. Let's discuss our momentum and strategy. Taking a step back, it took Google more than 15 years to reach $100 billion in annual revenue. In just the last 6 years, we've gone from $100 billion to more than $300 billion in annual revenue. Of course, Search continues to power that, as you see in our Q1 results. But in addition, we expect YouTube overall and Cloud to exit 2024 at a combined annual run rate of over $100 billion. This shows our track record of investing in and building successful new growing businesses. Now, let's look at how well we are positioned for the next wave of AI innovation and the opportunity ahead. There are 6 points to make. 1, research leadership. 2, infrastructure leadership. 3, innovation in search. 4, our global product footprint. 5, velocity in execution. 6, monetization paths. First, our foundation of research leadership. We've been an AI-first company since 2016, pioneering many of the modern breakthroughs that power AI progress for us and for the industry. Last week, we further consolidated teams that build AI models under Google DeepMind. This will help simplify development and establish a single access point for our product teams as they build generative AI applications with these models. The teams are making rapid progress developing Gemini and other models. In February, we rolled out Gemini 1.5 Pro, which shows dramatic performance enhancements across a number of dimensions. It includes a breakthrough in long context understanding, achieving the longest context window of any large-scale foundation model yet. Combining this with Gemini's native multimodal understanding across audio, video, text, code, and more, it's highly capable. We are already seeing developers and enterprise customers enthusiastically embrace Gemini 1.5 and use it for a wide range of things. Beyond Gemini, we have built other useful models, including our Gemma open models, as well as image and visual models and others. Second, infrastructure leadership. We have the best infrastructure for the AI era. Building world-leading infrastructure is in our DNA, starting in our earliest days when we had to design purpose-built hardware to power search. Our data centers are some of the most high-performing, secure, reliable, and efficient in the world. They've been purpose-built for training cutting-edge AI models and designed to achieve unprecedented improvements in efficiency. We have developed new AI models and algorithms that are more than 100 times more efficient than they were 18 months ago. Our custom TPUs, now in their 5th generation, are powering the next generation of ambitious AI projects. Gemini was trained on and is served using TPUs. We are committed to making the investments required to keep us at the leading edge in technical infrastructure. You can see that from the increases in our capital expenditures. This will fuel growth in cloud, help us push the frontiers of AI models, and enable innovation across our services, especially in search. AI innovations in search are the third and perhaps the most important point I want to make. We have been through technology shifts before, to the web, to mobile, and even to voice technology. Each shift expanded what people can do with search and led to new growth. We are seeing a similar shift happening now with generative AI. For nearly a year, we've been experimenting with SGE in search labs across a wide range of queries. And now we are starting to bring AI overviews to the main search results page. We are being measured in how we do this, focusing on areas where GenAI can improve the search experience while also prioritizing traffic to websites and merchants. We have already served billions of queries with our generative AI features. It's enabling people to access new information, to ask questions in new ways, and to ask more complex questions. Most notably, based on our testing, we are encouraged that we are seeing an increase in search usage among people who use the new AI overviews, as well as increased user satisfaction with the results. And with Circle to Search, people can now circle what they see on their Android screens, ask a question about an image or object in a video, and get an AI overview with Lens. Fourth, our global product footprint beyond search. We have 6 products with more than 2 billion monthly users, including 3 billion Android devices. 15 products have 500 million users, and we operate across 100+ countries. This gives us a lot of opportunities to bring helpful GenAI features and multimodal capabilities to people everywhere and improve their experiences. We have brought many new AI features to Pixel, Photos, Chrome, Messages, and more. We are also pleased with the progress we are seeing with Gemini and Gemini Advanced through the Gemini app on Android and the Google app on iOS. Fifth, improved velocity and execution. We've been really focused on simplifying our structures to help us move faster. In addition to bringing together our model building teams under Google DeepMind, we recently unified our ML infrastructure and ML developer teams to enable faster decisions, smarter compute allocation, and a better customer experience. Earlier this year, we brought our search teams together under one leader. And last week, we took another step, bringing together our platforms and devices teams. The new combined team will focus on delivering high-quality products and experiences, bolstering the Android and Chrome ecosystems, and bringing our best innovations to partners faster. We also remain focused on long-term efforts to durably re-engineer our cost base. You can see the impact of this work reflected in our operating margin improvement. We continue to manage our headcount growth and align teams with our highest priority areas. This speeds up decision-making, reduces layers, and enables us to invest in the right areas. Beyond our teams, we are very focused on our cost structures, procurement, and efficiency. And a number of technical breakthroughs are enhancing machine speed and efficiency, including the new family of Gemini models and a new generation of TPUs. For example, since introducing SGE about a year ago, machine costs associated with SGE responses have decreased 80% from when first introduced in labs, driven by hardware, engineering, and technical breakthroughs. We remain committed to all of this work. Finally, our monetization path. We have clear paths to AI monetization through ads and cloud, as well as subscriptions. Philip will talk more about new AI features that are helping advertisers, including bringing Gemini models into Performance Max. Our cloud business continues to grow.
All right, one thing I wanted to note real quick. It's a good thing that they actually said we have a clear path to AI monetization. Completely the opposite of what Meta said yesterday. So it's very smart that they learned something from Zuck, I think.
As we bring the best of Google AI to enterprise customers and organizations around the world. And Google One now has crossed 100 million paid subscribers. And in Q1, we introduced a new AI premium
Yes, please hit the like, guys. I'll make this as painless as you can get for an earnings call.
plan with Gemini Advanced. Okay, those are the 6 points. So now let me turn to quarterly highlights from Cloud and YouTube in a bit more detail. In Cloud, we have announced more than 1,000 new products and features over the past 8 months. at Google Cloud Next, more than 300 customers and partners spoke about their generative AI successes with Google Cloud, including global brands like Bayer, Cintas, Mercedes-Benz, Walmart, and many more.
Up almost 15%.
Our differentiation in cloud begins with our AI hypercomputer, which provides efficient and cost-effective infrastructure to train and serve models. Today, more than 60% of funded GenAI startups and nearly 90% of GenAI unicorns are Google Cloud customers. And customers like PayPal and Kakao Brain are choosing our infrastructure. We offer an industry-leading portfolio of NVIDIA GPUs along with our TPUs. This includes TPU v5p, which is now generally available, and NVIDIA's latest generation of Blackwell GPUs. We also announced Axion, our new Google design and ARM-based CPU. In benchmark testing, it has performed up to 50% better than comparable x86-based systems. On top of our infrastructure, we offer more than 130 models, including our own models, open source models, and third-party models. We made Gemini 1.5 Pro available to customers, as well as Imagen 2.0 at Cloud Next. And we shared that more than 1 million developers are now using our generative AI across tools, including AI Studio and Vertex AI. We spoke about how customers like Bristol Myers Squibb and Etsy can quickly and easily build agents and connect them to their existing systems. For example, Discover Financial has begun deploying GenAI-driven tools to its nearly 10,000 call center agents to achieve faster resolution times for customers. Customers can also now ground their GenAI with Google Search and their own data from their enterprise databases and applications. In Workspace, we announced that organizations like Uber, Pepperdine University, and PennyMac are using Gemini in Google Workspace, our AI-powered agent that's built right into Gmail, Docs, Sheets, and more. We also announced Google Vids, a new application to create stories in short video format. And we introduced Gemini for meetings and messaging, and Gemini Security for Workspace. Customers are choosing Workspace because they have deep trust in our powerful security and privacy features. Our cloud business is now widely seen as the leader in cybersecurity. I saw this firsthand when I went to the Munich Security Conference in February. Cybersecurity analysts are using Gemini to help spot threats, summarize intelligence, and take action against attacks, helping companies like American Family Insurance aggregate and analyze security data in seconds instead of days. Turning next to YouTube, which continues to grow and lead in streaming. We announced that on average, viewers are watching over 1 billion hours of YouTube content on TVs daily. AI experiments like Dream Screen will give anyone the ability to make AI-generated backgrounds for YouTube Shorts. And on subscriptions, which are increasingly important for YouTube, we announced that in Q1, YouTube surpassed 100 million music and premium subscribers globally, including trialers. And YouTube TV now has more than 8 million paid subscribers. Finally, in other bets, Waymo's fully autonomous service continues to grow ridership in San Francisco and Phoenix with high customer satisfaction, and we started offering paid rides in Los Angeles and testing rider-only trips in Austin. Overall, it was a great quarter, and there's more to come. I/O is in less than 3 weeks, followed by Brandcast and Google Marketing Live. I want to thank our employees around the world who are at the heart of this progress and who continue to focus on building innovative products, helpful services, and new opportunities for businesses and partners around the world. Thank you. Philip.
Thanks, Sundar, and hi, everyone. Google Services revenue of $70 billion were up 14% year-on-year. Search and other revenues grew 14% year-on-year, led again by solid growth in the retail vertical, with particular strength from APAC-based retailers, which began in the second quarter of 2023. YouTube ads revenues were up 21% year-on-year, driven by growth in both direct response and brand. Network revenues declined 1% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues increased 18%, driven again by strong growth in YouTube subscriptions. Let's now talk about a few highlights from the quarter from a product innovation and advertising performance perspective. First, it bears repeating that AI innovation across our ads ecosystem is core to every aspect of our product portfolio, from targeting, bidding, creative, measurement, and across campaign types. We've talked about how solutions like smart bidding use AI to predict future ad conversions and their value in helping businesses stay agile and responsive to rapid shifts in demand. and how products like Broadmatch leverage LLMs to match ads to relevant searches and help advertisers respond to what millions of people are searching for. This is foundational. As advances accelerate in our underlying AI models, our ability to help businesses find users at speed and scale and drive ROI just keeps getting better. We're especially excited about the doors GenAI is opening for creative capabilities, helping deliver on the premise of getting the right ad to the right user in the right moment. Look at Performance Max. In February, we rolled Gemini into PMax. It's helping curate and generate text and image assets so businesses can meet PMax asset requirements instantly. This is available to all US advertisers and starting to roll out internationally in English, and early results are encouraging. Advertisers using PMax asset generation are 63% more likely to publish a campaign with good or excellent ad strength. And those who improve their PMax ad strength to excellent see 6% more conversions on average.
Sorry, I know this part can be boring.
We're also driving improved results for businesses opting into automatically
Talk amongst
created
yourselves.
assets, which are supercharged with GenAI. Those adopting ACA see on average 5% more conversions at a similar cost per conversion in Search and Performance Max campaigns. And then there's Demand Gen. Advertisers are loving its ability to engage new and existing customers and drive purchase consideration across our most immersive and visual touchpoints like YouTube, Shorts, Gmail, and Discover. Hollywood film and TV studio Lionsgate partnered with Horizon Media to test what campaign type would deliver the most ticketing page views for its The Hunger Games, Ballad of Songbirds, and Snakes film. Over a 3-week test, Demand Gen was significantly more efficient versus social benchmarks, with an 85% more efficient CPC and 96% more efficient cost per page view. Lionsgate has since rolled out Demand Gen for 2 new titles. We're also bringing new creative features to Demand Gen. Earlier this month, we announced new generative image tools to help advertisers create high-quality assets in a few steps with a few simple prompts. This will be a win for up-leveling visual storytelling and testing creative concepts more efficiently. And then there's obviously search generative experience, which Sundar talked about. I'll add that innovation in the user experience on search has historically opened up new opportunities for advertisers. We saw this when we successfully navigated from desktop to mobile. We're continuing to experiment with new ad formats, including search and shopping ads alongside search results in SGE. And we shared in March how folks are finding ads either above or below the SGE results helpful. We're excited to have a solid baseline to keep innovating on and confident in the role SGE, including ads, will play in delighting users and expanding opportunities to meet user needs. Which brings me to search and our strong performance in the first quarter. In Q1, retail was again a top contributor. Our focus remains on...
Sorry, I was telling you that we're up 16% in after hours right now for Google. Tomorrow's going to be an awesome day for markets, most likely.
Driving profitability and growth for retailers, helping them optimize digital performance for both online and offline, as well as innovate across our shopping and merchant experiences. Highlights include continued upsides for retailers, leading into agile budget and bidding strategies across Search, PMax, or both. Take-home goods retailer IKEA, who leaned into Google's store sales measurement to understand its total omnichannel revenue opportunity across Search. By measuring 2.3 times more revenue and using value-based bidding solutions to bid to its omnichannel customers, IKEA drove a significant increase in omni revenue in Q1 and is now scaling this strategy globally. We also expanded local inventory ads into 23 countries, helping drive shopper confidence and offline sales. Retailers can convert intent into action by showcasing in-store availability.
Congrats, Gorgo. Yeah, you should do really well, man. Especially if you're in an options play, you're going to do sick. Kent, Jesse, I really like that you look up visual stocks. Are you happy with it? Worth the cost? I love it. I love it. You could get it for free, but I love it. It's really great.
Pricing, pickup options, and more, all in one ad format. Moving to YouTube. Last quarter, I went deep into our strategy. It all starts with creation, which drives viewership, which leads...
Oh, and for people that are coming late, we've got dividends for the first time ever with Google. That is probably another reason it's screaming higher.
...to monetization. A few updates to build on Sundar's remarks. First, creation, which is all about giving creators the tools to create amazing content, grow their audiences, and build their businesses. In 2023, more people created content on YouTube than ever before, and the number of channels uploading shorts year on year grew 50%. We also hit a new milestone with 3 million plus channels in our YouTube Partner Program. We recently shared that YPP has paid out more than any other creator monetization platform.
The board has authorized repurchases of an additional $70 billion of Class A and C shares. That is no tiny number.
Including over $70 billion to creators, artists, and media companies over the last 3 years. From a viewer's perspective, watch time across YouTube continues to grow, with strength in both Shorts and CTV. According to Nielsen, YouTube has been the leader in US streaming watch time for the last 12 plus months. In the first quarter, Living Room benefited from a combination of strong watch time growth, innovation in the user and advertiser experience, and a shift in brand advertising budgets from linear TV to YouTube. Viewers are watching YouTube because they expect to access everything in one place, across screens and formats, their favorite creators, live sports, breaking news, educational content, movies, music, and more. And advertisers continue to lean in to find audiences they can't find elsewhere. Which brings me to monetization. We're pleased with our Q1 performance across both our ad-supported and subscription offerings. Sundar covered subscription growth. On the ads front, direct and brand were both strong this quarter. Shorts monetization continued to improve, with Shorts ads now supported on mobile, tablet, living room, and desktop, and available to both performance and brand advertisers. In the US, the monetization rate of Shorts relative to in-stream viewing has more than doubled in the past 12 months, including a 10-point sequential improvement in the first quarter alone. Just last week, we introduced new ways for brands to get the most out of their Shorts ads with new lineups on YouTube Select, including sports, beauty, fashion and lifestyle, and entertainment. For YouTube advertisers, increasing brand lift is one of the core goals. In Q1, we saw strong traction from the introduction of a pause ads pilot on connected TVs, a new non-interruptive ad format that appears when users pause their organic content. Initial results show that pause ads are driving strong brand lift results and are commanding premium pricing from advertisers. Before I wrap, 2 quick highlights on how we're helping our partners transform and accelerate impact with the best across Google. Number 1, to help McDonald's build the restaurant of the future, we're deepening our partnership across cloud and ads. Part of this includes them connecting Google Cloud's latest hardware and data technologies across restaurants globally and starting to apply Gen AI to enhance its customer and employee experiences. Number 2, WPP. At Google Cloud Next, we announced a new collaboration that will redefine marketing through the integration of our Gemini models with WPP Open, WPP's AI-powered marketing operating system already used by more than 35,000 of its people and adopted by key clients including the Coca-Cola Company, L'Oreal, and Nestle. We're just getting started here and excited about the innovation this partnership will unlock. With that, a huge thank you to our customers and partners, many of whom we're excited to see at Google Marketing Live and Brandcast in just a few weeks. And a huge thank you, as always, to our incredible teams for their agility and hard work this quarter. Ruth, you're up.
Thank you, Philip. We are very pleased with our financial results for the first quarter, driven in particular by strength in search and cloud, as well as the ongoing efforts to durably re-engineer our cost base. My comments will be...
All right, real quick. So you asked what my next earnings was going to be. It'll probably be Teladoc tomorrow. Just because I'm thinking about dabbling in this in the future, I might never touch it. I've looked at it from a bunch of different avenues and done some due diligence already, but I want to start listening to conference calls with them. So I'll be going over that tomorrow. I'll make the market recap, the priority though, and then this will be secondary. Next week is MicroStrategy and SoFi. MicroStrategy, I don't even care about listening to because it's all going to be like, what did their Bitcoin do? So I will be doing SoFi on Monday, and then I'll be doing PayPal on Tuesday. And then Wednesday, I don't know if there will be anything, but Block for sure next Thursday. So there's a lot of stuff coming up. Or I'm sorry, TDoc was today too. I've got to look at that next. I guess I don't have Google on here. And then there's going to be more.
On year-over-year comparisons for the first quarter, unless I state otherwise. I will start with results at the Alphabet level, followed by segment results, and conclude with our outlook. For the first quarter, our consolidated revenues were $80.5 billion, up 15%, or up 16% in constant currency. Search remained the largest contributor to revenue growth. In terms of total expenses, the year-on-year comparisons reflect the impact of the restructuring charges we took in the first quarter of 2023 of $2.6 billion, as well as the $716 million in employee severance and related charges in the first quarter of 2024. As you can see in our earnings release, these charges were allocated across the expense lines in other cost of revenues and OPEX based on associated headcount. To help with year-on-year comparisons, we included a table in our earnings release to adjust other cost of revenues, operating expenses, operating income, and operating margin to exclude the impact of severance and related office space charges in the first quarter of 2023 versus 2024. In terms of expenses, total cost of revenues was $33.7 billion, up 10%. Other cost of revenues was $20.8 billion, up 10% on a reported basis, with the increase driven primarily by content acquisition costs associated with YouTube, given the very strong revenue growth in both subscription offerings and ad-supported content. On an adjusted basis, other cost of revenues were up 13% year-on-year. Operating expenses were $21.4 billion, down 2% on a reported basis, primarily reflecting expense decreases in sales and marketing and G&A, offset by an increase in R&D. The largest single factor in the year-on-year decline in G&A expenses was lower charges related to legal matters. On an adjusted basis, operating expenses were up 5%, reflecting first in R&D an increase in compensation expense, primarily for Google DeepMind and Cloud, and second in
Sarthak, you said, could PCE report tomorrow be an issue for tomorrow's run? Briefly, probably as much of an issue as it was today, maybe less, probably less, right? Because it's kind of forecasted because we got the Q over Q, so we kind of know the month.
sales and marketing, a slight increase year on year, reflecting increases in compensation expense, primarily for cloud sales. Operating income was $25.5 billion, up 46% on a reported basis, and our operating margin was 32%. On an adjusted basis, operating income was up 31%, and our operating margin was 33%. Net income was $23.7 billion, and EPS was $1.89. We delivered free cash flow of $16.8 billion in the first quarter and $69.1 billion for the trailing 12 months. We ended the quarter with $108 billion in cash and marketable securities. Turning to segment results. Within Google Services, revenues were $70.4 billion, up 14%. Google Search and other advertising revenues of $46.2 billion in the quarter were up 14%, led again by growth in retail. YouTube advertising revenues of $8.1 billion were up 21%, driven by both direct response and brand advertising. Network advertising revenues of $7.4 billion were down 1%. Subscriptions, platforms, and devices revenues were $8.7 billion, up 18%, primarily reflecting growth in YouTube subscription revenues. TAC was $12.9 billion, up 10%. Google Services operating income was $27.9 billion, up 28%, and the operating margin was 40%. Turning to the Google Cloud segment, revenues were $9.6 billion for the quarter, up 28%, reflecting significant growth in GCP with an increasing contribution from AI and strong Google Workspace growth, primarily driven by increases in average revenue per seat. Google Cloud delivered operating income of $900 million and an operating margin of 9%. As to our other bets for the first quarter, revenues were $495 million, benefiting from a milestone payment in one of the other bets. The operating loss was $1 billion. Turning to our outlook for the business. With respect to Google Services, first within advertising, we are very pleased with the momentum of our ads businesses. Search had broad-based strength across verticals. In YouTube, we had acceleration in revenue growth driven by brand and direct response. Looking ahead, 2 points to call out. First, results in our advertising business in Q1 continue to reflect strength in spend from APAC-based retailers, a trend that began in the second quarter of 2023 and continued through Q1, which means we will begin lapping that impact in the second quarter. Second, the YouTube acceleration in revenue growth in Q1 reflects, in part, lapping the negative year-on-year growth we experienced in the first quarter of 2023. Turning to subscriptions, platforms, and devices. We continue to deliver significant growth in our subscriptions business, which drives the majority of revenue growth in this line. The sequential quarterly decline in year-on-year revenue growth for the line in Q1 versus Q4 reflects in part the fact that we had only 1 week of Sunday Ticket subscription revenue in Q1 versus 14 weeks in Q4. Looking forward, we will anniversary last year's price increase in YouTube TV starting in May. With regard to platforms, we are pleased with the performance in Play, driven by an increase.
All right, we got new data, so I'm going to start pulling these visuals up too, and we can look at it.
In buyers. With respect to Google Cloud, performance in Q1 reflects strong demand for our GCP infrastructure and solutions, as well as the contribution from our workspace productivity tools. The growth we are seeing across cloud is underpinned by the benefit AI provides for our customers. We continue to invest aggressively while remaining focused on profitable growth. As we look ahead, 2 points that will affect sequential year-on-year revenue growth comparisons across Alphabet. First, Q1 results reflect the benefit of leap year, which contributed slightly more than 1 point to our revenue growth rate at the consolidated level in the first quarter. Second, at current spot rates, we expect a larger headwind from foreign exchange in Q2 versus Q1.
Right.
Turning to margin,
I don't know if that data is right. We're not going to look at it right now.
our efforts to durably re-engineer our cost base are reflected in a 400 basis point expansion of our Alphabet operating margin year on year, excluding the impact of restructuring and severance charges in both periods. You can also see the impact in the quarter-on-quarter decline in headcount in Q1, which reflects both actions we have taken over the past few months and a much slower pace of hiring. As we have discussed previously, we are continuing to invest in top engineering and technical talent, particularly in cloud, Google DeepMind, and technical infrastructure. Looking ahead, we remain focused on our efforts to moderate the pace of expense growth in order to create capacity for the increases in depreciation and expenses associated with the higher levels of investment in our technical infrastructure. We believe these efforts will enable us to deliver full year 2024 Alphabet operating margin expansion relative to 2023. With respect to CapEx, our reported CapEx in the first quarter was $12 billion, once again driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers, followed by data centers. The significant year-on-year growth in CapEx in recent quarters reflects our confidence in the opportunities offered by AI across our business. Looking ahead, we expect quarterly CapEx throughout the year to be roughly at or above the Q1 level, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. With regard to other bets, we similarly have work streams underway to enhance overall returns. Finally, as I trust you saw in the press release, we are very pleased to be adding a quarterly dividend of 20 cents per share to our capital return program, as well as a new $70 billion authorization in share repurchases. The core of our capital allocation framework remains the same, beginning with investing aggressively in our business, as you have heard us talk about today, given the extraordinary opportunities ahead. We view the introduction of the dividend as further strengthening our overall capital return program. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated.
Hey, real quick, I just wanted to say this. Martin Rydberg said, tips on adding earnings dates to Google Calendar, copy and paste, or is there a plugin? Should be a feature of visual stocks. I 100% agree with that. I don't know how easy that would be to accomplish. He could probably, Alejandro, if you're listening, probably be a good idea to at least get a link maybe to it or a place where you could add it if it's possible. Otherwise, even just links on your site that would point to earnings, the earnings page would be amazing. Again, I don't know how easy that is.
First question comes from Brian Nowak with Morgan Stanley. Please go ahead.
Great. Thanks for taking my question. I have two. The first one, I wanted to ask about overall search behavior. Philip, I know you talked in the past about how overall query trends continue to grow. Can I ask you to drill a little bit more into monetizable and commercial query trends? Have there been any changes in sort of your commercial query trends growth? There's been all these new entrants moving around in e-commerce is my first one. And the second one for Ruth, when you talked about sort of more efforts to moderate expense growth from here, can you just sort of give us some examples of areas where you still see the potential for more optimization or work streams in place to continue to durably re-engineer the OpEx space as we go throughout 2024? Thanks.
Thanks, Brian. To your first question, look, I think broadly, we've always found that over many years when things work well on the organic side, monetization follows. So typically, the trends we see carry over well. Overall, I think with generative AI in search, with our AI overviews, we are definitely, I think we will expand the type of queries we can serve our users. We can answer more complex questions well. And in general, that all seems to carry over across query categories. Obviously, it's still early, and we are going to be measured and put user experience at front. But, we are positive about what this transition means.
And on the second question, in terms of the various work streams, as both Sundar and I said, we remain very focused on ongoing efforts to slow the pace of expense growth, what we've been calling durably reengineering our cost base. And I made this point in opening comments, but we are very cognizant of the increasing headwind we have from higher depreciation and expenses associated with the higher capex. And so these efforts are ongoing, and they're very much the same that we've talked with you about previously. It starts with product and process prioritization, all of the work around organizational efficiency and structure. These are ongoing. And so, as an example, the work that Sundar talked about, combining devices and services with our platforms and ecosystems, product area is a really good example, because unifying the teams not only helps us deliver higher quality products and experiences, but we think it enables us to move with greater velocity and efficiency. And then the other work streams we've talked to you about in the past, like all of the work around technical infrastructure, which Sundar alluded to, streamlining operations within the company through the use of AI, what we're doing with procurement with our suppliers and vendors, which he also referenced, the work you've seen on real estate optimization. These are all ongoing work streams, which is why we have them under the umbrella durably reengineering our cost base, and they are ongoing.
Our next question comes from Doug Amuth with J.P. Morgan.
Hey guys, please vote on whether or not you want to hear the rest of this call or whether or not you want me to get back to the market recap. And at any point, if you guys want to do that, just hit me up.
Line is now open.
Oh, thanks, Alejandro. Let me take a look. Let me take a look real quick here over at the board. Are we 100% sure it's updated, Alejandro? It says I'm seeing like 69 billion in revenue. I think the number was bigger than that. If you could just double check real quick. I'm going to let the... All right, everybody wants to bail. We're going to bail. We're done with the call. We might pull up the rest of this data in a little bit, but we're moving on. Let's get back to work. All right. All right, cool. That sounds good. All right, so we're going to start pulling up tickers real quick. I want to get back to just looking at everything we need to look at. Let's look at Bitcoin. We haven't done anything with that. And then let me shrink this down here. Oh, also, let me just fix this. All right, so we can still see how the ticker's doing. And if there's any more pertinent information, I'll try and add it later here. Let's get back over. All right, so Bitcoin today, where are we at right now? All the miners are up after hours. I can see why. I can see why. We're getting close to that fib again. We got this weird doji here bouncing on all sides, guys. This is probably a good sign. I think we're going to start curving up. Again, we've got so many wicks. Like, look at this. Straight up. Up, still doing all right. Wicked up, not quite bullish. Or bullish engulfing, I should say. It's not quite a bullish candle for the close. And then bullish, huge bounce, decent bounce, huge bounce. It's like we are bottoming in Bitcoin's price right now on this weekly time frame. We're bottoming. We're getting ready to go higher. This thing is very bullish. And it doesn't surprise me at all that miners are going up. Let's look real quickly. Let's see if MSTR and some of these others are too. Let's roll through all this stuff. Okay. So 1% on MicroStrategy after hours, down 2% on the day. So again, feels kind of bottomy. Let's see, CLSK. Clean Spark up 1.89%. So actually up on the day if we include after hours. That seems pretty bottomy. Cypher. Cypher's up 1.35%. So it made back about a third of its drop today. That looks all right. Let's look up Mara and then let's look up like Bitfarms. I don't like to go much further beyond that. They get too shitty. All right, let's see here. Up 4.31%. That's a heck of a bounce. Again, Mara has FASB accounting rules, and it's the largest Bitcoin holder outside of like a MicroStrategy and a Grayscale and some of these other ETFs. So they get to benefit from all that stuff. So I wouldn't be surprised to see them bouncing. I will be doing their earnings call as well. And then Bitfarms, let's take a look here. Bitfarms up 1.75, so it made back 60, 70% almost of its, and it's back above the downward resistance line, which is great. It's turning it into support. You gotta love it. RJ, thank you for joining, man. Appreciate you. Why Cypher versus the other miners? They're good across, they're a small cap, but they're not like They're not like the size of Bitfarms where they're much smaller. They hold Bitcoin. They have aggressive plans for expansion. I think it's like 18 exahash, maybe it's 17. They're going to have a lot of new miners, so they're going to be able to profit from their FASB accounting rules with their Bitcoin, and they're going to be able to profit because they're going to have some of the latest equipment. So it's just a really clean small cap miner. That's why I like it. Mara guiding 50 exahash in 2024, all fully funded. After hours news today. That'll do it. We'll see if they do it. They have a history of kind of sucking at completing some of their promises. But again, they're theoretically they're not that far from it. They just got to keep their shit up. So hopefully they can accomplish that. But again, I have no hate towards Mara outside of just maybe not having a clear, like, easily attainable vision, and they're just going in like 20 million fucking directions. Yeah, they're trying to build an ASIC. They've got stable coin things that they're trying to do with their own shit coins and then they've got Slipstream, and just like there's just all this stuff that can be hard to quantify a value behind. So it's not a super clean play because of that. But then the part that makes it a cleaner play, whoa, we just had a weird wick in Google again. Look at that. Massive drop and then just going back up. Strange. But then what makes Mara a clean play, it kind of makes up for some of their operational issues, is the fact that they have a shit ton of Bitcoin that they bought years ago. That really helps. You could be retarded and be making money right now if you just hold a bunch of Bitcoin. All right. Hey, Jesse, can you look at BTDR? Yeah, I can do that real quick. I'll look. And then if you guys have any other tickers you want me to look up, I'm in that mode right now. So throw your shit out there if you got it. I don't actually have this ticker, it looks like, so I will have to make a copy. What is it? BTDR. And for guys that don't know, if you join, and if you're on iOS, you have to request desktop or do it on a desktop because they don't make it easy for people to join people's YouTube channels. But if you join for $2.99 at least a month, you'll be able to request basically stocks, and I'll pull them up and I'll tell you what they look like and whether or not I like them from a financial level and a technical level, which not a lot of people will do. All right. Bitdeer doesn't look too super interesting. It's obviously had a rough, time since December. Bitdeer was at 14 and now it's at 6. So it's down over 60%. That's not great. And if we look, these guys don't. So like this is the problem, right? This is the thing I don't like, and I'll just show you real quick here for Bitdeer so I can give you guys an example of like why I don't like some of these other miners. If I go over to key charts here, you know what I'm not seeing? Bitcoin, and that sucks, and it's going to make it to where they don't make as much money. And these guys reported a $5 million loss in Q4, and they might still have a loss if we look here at their estimates. For Q1, they're estimating to hopefully make money, and then not really make money for a couple more quarters. And I don't know what their exahash is off the top of my head. I'd have to pull it up here, and I'm probably not going to do that right now. I can look later. But I don't think they have strong expansion goals. They're a $700 million market cap, and their revenue is only $114 million. And like the net income for Mara was twice this number. So at $747 million, I just don't think that's that good. Let's have a look at TDoc. Let's do that. I'll pull up my other stuff real quick here. I do want to look at TDoc because I want to see how they did. Real quickly, I'm going to pull up Palantir. Somebody asked for that. I'm going to pull up the rest of some of the common stocks that I follow and own, and then we'll look at those. Palantir up 2%, almost. 2.4-ish, 2.5-ish on the day. Not a bad number. I like that it's staying above the fib. Really need to get above the $25 number. That's the big number. That's where all the volume is. If we can get above that and turn it into support instead of just immediately dropping underneath of it like we've done every single time all these weeks over here, then they might do all right. ArcG, I want to pull up real quick. I bought more of this today. You are welcome, Agam. All right, so down 2.79. I'm actually thinking we're going to get a double bottom, so I'm hoping for another down day tomorrow. With making almost 100,000 on Tesla today, I might trim another 1% or 2% off of Tesla, and look to buy a dip and something like this if it keeps going down further. All right, I want to pull up Flux real quick. A lot of stuff. Again, SoFi earnings next Monday. What was it? Tuesday PayPal. There's a lot of stuff happening, guys. So Flux actually had a pretty good day, up 3.52. Volume in after hours is just super sketchy, so I don't even pay attention to the fact that it says it's down 3% because it's just non-existent volume. So a very small move can move it a lot. So don't really care about that. Let me look here. PayPal. PayPal on the day moved down 1.14%. It was actually down lower than that. And if you look here, it was on peak volumes that it dropped today and actually fell a little bit underneath. And then it's bounced actually pretty hard. And in the after hours, it's up 0.55%. So really, it didn't even drop like 0.7% today, which is great. I think that this one is set to go higher, and which is why I bought like another 20,000 or something, whatever I bought. SoFi. If I forget anything, let me know, guys. All right, SoFi up down 0.13% on the day, up 1.19% in after hours. This thing is ready to rock it. I think SoFi is going to crush it. Again, the web traffic for that company is at the highest levels it's ever been at. It's kind of a no-brainer in my opinion. Hood. Hood, down 1.1% on the day, up 0.58% after hours. Still underneath the fib here, but I think if Bitcoin starts bouncing, you're going to see this go. We're down like 79% from the high on this thing. Pretty easy trip to $30. I will make that argument still, and with 77% upside on that wouldn't be a super bad trip. But once we hit 77 to 96%, we could retrace and chop for like a while, months, maybe quarters even. All right, let's move on here. What else we got? Let me pull up TDoc. If anybody wants anything else, I think I'm kind of working down the line here, so hop on in. Busy day for Alejandro. When TDoc is updated, yeah, he's getting TDoc too. Yeah, okay. So this one did drop. Gosh, this one just sucks so bad. The stock has just been brutalized. I am curious to see what their earnings are like. The stock is not really anywhere in after hours. When did their earnings happen? Was it today? Let me see here real quick. Yeah, so they missed on revenue, and then earnings, and then they beat on revenue, but not super high numbers there. And I'll go into a deeper dive. I'm going to look at that one later on my own time here. Let's see. Did I miss anything else? Oh, did you see the sweet tweet from CLSK on track to double exahash by June, triple by end of the year? That's freaking awesome. It looks like it's a showdown, guys. It's a showdown between Mara and CleanSpark. I would put my money on CleanSpark for operational. I would put my money on Mara for FASB accounting rules. So that's where I sit. I think they could both do good. Mara's a bigger cap, so, and then CleanSpark is better run. So I don't know. We'll see where we land. All right, FC. Let me see here. Do you make plays and IPOs if they're interesting enough? Would you be interested in Anduril? Oh, dude, I would fucking buy the shit out of Anduril. Anduril is an amazing company. I don't know if you guys saw this. I gotta find this. This is important. Anduril is a company that is replacing the military industrial complex that exists right now, which is just fucking trash, and which basically pilfers taxpayers to steal money from the federal government, building a bunch of shit that we don't need and innovating very little. So, and Anduril just won a contract. The U.S. Air Force has selected Anduril to design, manufacture, and test production representative collaborative combat aircraft. This fucking thing. So, Anduril is the real deal. Anduril is the military in the next decade. And if this turns into an IPO, I'd put $1 million into it easily. Maybe more. Of course, this is assuming I have more than I have today, which I will. But yeah, Anduril's a great company, and they'll be the military of the United States in the future. It will be from this company. All the other companies are just pathetic. TDoc, though, let me just jump back to that real quick. So TDoc is down just a frightening number. It is down 96% almost from its high. And their revenues, again, are just not super great. What did they report? 646 million. But again, then they lost on it, so they ended up losing money. This company, let's see, is it up over here? I don't know if this is updated. It's a smaller company, so I don't know if these get prioritized in any order. Let me just see. So let me see over here. Yep, not updated yet. So that's not there. But yeah, they're just so tiny. I'm still going to monitor this one. I might do a video in the future if I feel like there's a recovery play here where it can go up again. But personally, I don't love it. I don't love it right now because I don't know. Again, their cash position was actually getting better. Oh, okay. Thanks, Alejandro. Their cash. Let me know when it's up. Their cash position's getting better, but they still have a decent amount of debt, and they're having to dilute shares, and they aren't really making any money yet. And the revenue growth seems like it's gotten a little toppy in 2021 to 2022, 2023. It just seems like it's not going very far, and then total visits were going down. We'll see what their quarter looks like this time. I'm imagining hasn't gotten much better. They're a $2.3 billion company, and yet they don't really have any money. So, I mean, it could go either way. If all of a sudden they start turning things around, you could see the market cap start to climb once the narrative catches up. I'm hoping to catch that before other people catch it, which is why I want to keep an eye on it. I do like, though, that they're starting to buy, this isn't a ton of shares. It's like 1,500,000 shares. So it's a decent amount. But they're not that much in value right now. You can see where they sold a lot in 2021 when it was rated like much higher. That was probably a smart move on their part. And now the insiders have been buying ever since, and they're buying more than they're selling. So that's a pretty good indication. SpaceX and Anduril would be two hot IPOs. Oh, dude, they totally would. I don't actually think SpaceX will probably never be an IPO, but Starlink's supposed to be. Or Elon's gonna roll all the companies up into a single parent holding company where you would get like Neuralink, SpaceX, Tesla, their AI Grok piece, the Boring Company. You would get everything under that umbrella org, which would probably, I think it would just be X Corp, which sounds like something off of Resident Evil. But I think that actually is probably more likely than like individual IPOs, or maybe they do individual IPOs and then they roll up into X Corp. But X Corp, Anduril, Palantir, and and owning some Bitcoin, and you're going to be one of the wealthiest people on earth in the next 10, 15 years. It's like a no-brainer. You don't even have to try that hard play. So much diversification. You're prepared for war. You're with the most innovative GDP producing companies on earth. It's like, and you've got the sovereignty of Bitcoin. You would make, it's a no-brainer, dude. It's sick. Is the Anduril contract just an R&D act to build? It is a contract to do the R&D, but based on every other contract that Anduril has done, that's how it starts out. It's a contract of like, show us your prototypes, and then when they see it, they're like, yep, that's happening. We'll sign a multi-billion dollar contract with you. So we'll see how it goes, but I'm super excited about that, man. I'm so excited. Real quickly, I missed a few. FCEL. That was from Celis. I can do that, my brother. I'm a little disorganized today. I'm trying to get better. I'm going to try and find balance. I really want to do earnings calls too, but I'll need to figure out the balance of how long I stick around. They might be really short ones where I just stick around just to get the key details. And like Google didn't do a good job, in my opinion. I would like to see a slide deck. I'd like to see something like Tesla. I'd like to see something like Meta, something where I can quickly kind of go through it. I don't want to post a bunch of boring fucking accounting shit. I want to show you some metrics that are easily, visibly, what am I trying to say? Consumed. There we go. That's a good word. That's a word that works. But something that you could just look at and be like, oh, okay, I get it. This is good. And something I can talk to really easily and like point out the visuals of it. Because just looking at like financial information bores the shit out of like 99% of people. And I could even see the dropout rate of people going. So, and I get it. I don't want to stick around either. Like I listen to everything I have to listen to, but if I can find somebody to just, summarize it later, great. But then when I look at like something like a Tesla call yesterday or a couple days ago, that I want to see the whole fucking thing because they have just beautiful charts, beautiful visualizations, divulge a ton of stuff in the Q&A, just real world stuff, not bullshit fluff answers. So I'll just have to figure out which of these conference calls do a really good job and which ones don't. This market cap is $380 million for fuel cell energy. Let me see if I can figure out what all that means, right? Fuel cells have been a thing that people talk about for a long time. It's like, is it real though? These guys lose money. $20 million in the last quarter. They made 16.7. So they have cash. They're diluting shares. They're basically in startup phase, right? And they're really good at losing money. And they had free cash flow was negative 76 million. Operating expenses are not going down outside of this last quarter here. They are not good at managing their operating expense. I should say this. Their SG&A, all the administrative stuff, not bad, right? But they're definitely still spending on R&D. And so what that tells you is that this company really is trying to figure out its niche in the future and figure out how it can make money. That's why they're putting so much into R&D. That's not bad if they're good with money. But again, we just still see losing money. We see hopefully higher revenues than what we've had over the last year and a half, 2 years of quarters. But stock-based comp is actually going up. It's 17% of revenue right now. Revenue's diving and operating expenses are going down a little bit slower. So I'm not interested in this company in any way at 380 million. Just don't care. If they actually start to turn things around, if they can figure out how to get to profitability or how to really grow revenue consistently, because they haven't done that, right? They haven't grown revenue consistently. They just fell till the pandemic, and then they popped, and now they look like they're falling again, and they've never lost more money than recently. This is nothing I would ever care about. Nothing. All right, Meta, I can look at Meta real quickly from the technical level, because again, we already did the earnings call yesterday, so there isn't much to look at there. One can just refer to that. But I can pull it up here. Meta had a nice bounce, and I predicted that actually earlier in the day too on X. So I said, hey guys, I don't know if you noticed this, but we filled the gap. So if you look over here, we had this big gap back over near like February. We filled it. We actually went down to the 400 range. So we filled it completely. And then we bounced yesterday right above the fib. And then, look at this today. Look at this. We're up solidly, right? And so we're going to get above the 100 moving average. I think with the ban on TikTok going into effect, it's not fully completed for 9 months, right? TikTok's going to sue the shit out of the U.S. government. Lots of questions about whether or not it's actually legal what the U.S. government is doing right now. I actually believe it is, and I think TikTok's getting banned. It's funny, though. The Biden administration is still using TikTok for his campaign, which is funny because they're working to ban it. Anyway, weird world we live in. All right, let me go through here. So next one, Sarthak, any chance? Oh, it jumped on me. I hate it. I hate that shit. I hate that. Let me see here. I got to find where I was. I wish that was fixed. All right, there we go. I think I'm back where I was. All right, so Chris, real quickly, once Google is fully ready, I'll focus on TDoc, then Snap, mini earnings today. Yeah, no doubt. Thoughts on Apple? They report next Thursday. I think Apple has a lot of China risk, and I would not want to have to deal with China risk right now. I think they're going to be the inverse of Tesla. Tesla did really good, even though they missed. I don't think Apple's going to do good, and I think they're going to miss. That's my guess. They've got so much China exposure, and it's not like they can just dish all their really expensive phones to other markets. China is a huge market for them, and they can't do what Tesla can do and just sell them other places because their production is a lot higher than what Tesla is right now. So Tesla has a lot of demand they can still feed in other markets, right? And they're still building cars for cheap in China. But I don't love Apple from that perspective. Real quickly here, let me pull it up. I'll look at the chart too. If I can learn how to type. All right, looking at Apple. Let's just kind of look at what the damage is. I put in here a while ago that they could go. That's funny, actually, because I think we have went up. So I said we could go up, back up to this 172 range, maybe even. And then I think we're collapsing down in Apple down to the 150s. Arguably, maybe the upper 150s. But I still think this is the move that's happening. I think we're going to be very disappointed by Apple. And you know what? I actually will probably do That's May 2nd. I'll do the Apple earnings call. That's definitely on my list. All right. Because now that I actually have a Mac, I like Apple a little bit more. Concord, Coin, please. Earnings May 2nd. I'm going to do Coin too if it doesn't overlap with anything else that I actually hold. But yes, I can pull them up. I think Coin's going to have some good Q1 earnings, just like I think Hood's going to have good Q1 earnings. I mean, the stock, you got to realize, from the low of the bear market is up 800, or was up 800%. Right now it's up 600. So you just have to put it in perspective. And from the recent high here, it was like 284, and we got down to like 210 or something like that. So we had a 3% drop, something like that. I think that Coin can go higher, but we're also at like a peak resistance level in its history here. So I don't know. I don't know right now with Bitcoin. Again, I think maybe even heading into the week, maybe for some reason we still get drawn down before the weekend. And so we see Bitcoin go down a little bit. And so maybe these chop down a little bit. But we did, like, once they do, I think we're off. And so any drops right now, I'm going to use things like Tesla, and I'm going to buy it, buy a bunch of Bitcoin and shit like it. Chris Cashman, NVO, please. All right, I don't know what that is, so I'm going to actually start over here with that one so I can kind of see what its financials look like, because I want to know. So Novo Nordisk, it sounds like a tech company. It is a biotech company. Interesting. It's mostly retail investing, no insiders, a little bit of institutions. They have revenue, though, and revenue growth. What the fuck is this? A unicorn? A biotech company that makes money? What is this? I might have to add this to my list, man. Oh, yeah, but they've done that. Woof. Yeah, dude, you should have told me about that like over here in 1987. Yeah, this is obviously a nice company, though. So 563 billion. Wow, this is a big company. I've never even heard of them. Let me see what revenues are. Revenues 9.4 billion. What did they net? 3 billion. That's a good number. They're still forward PE's 38, arguably a little rich, but with as consistently as this company and how much they've jumped in revenues and net income recently, I don't know if you can call that rich. I mean, I don't know if this is an asymmetric opportunity, but man, fuck, this might be a company I get more interested in the future. I don't like how they have spurts of really high stock-based comp. And their operating expense could kind of table off more for me. What? Is that right? Are you serious? Is that what? I got to look this one up afterwards. The float, so short interest is plummeting, but institutional ownership plummeted. That makes no sense to me. There's some stuff I need to figure out on this one. Too many weird little anomalies. This would be a huge growth rate increase. Lots of ratios ticking up the right way. There's just some weird stuff on this. I want to look at it later. And I'm definitely adding it on my notes. This is something. One sec here. Let's see. Yeah, right there. Look up NBO in more detail. All right, cool. I'll check that one out more later, man. I'm really very interested with what's happening with that. All right, let's see here. Berry Belly Daddy. All right, Beer Belly Daddy. Whoa, that's better. All right, ON on shoes are just loved. Oh, on. Okay, yeah. Here in Germany, and where's this company based out of? That people back at home, U.S. are loving them too. Word is they're buy, but I'm just. All right, let me look at the actual company. This is the company that does the shoes. They're not out of China though, right? I hope not. There's so many Chinese like shoe company type things. Is it On Holding? Is that? Yeah, okay. I've seen these shoes. I know I had some friends that just like. See, is that? Oh, it's Zurich. What is CH? Is this Germany? Is this German? Is that what you were saying? All right. So revenue, what's ticking up a lot? What are their estimates? Oh, nice guidance. Yeah, very good guidance. Let me see what you're saying live here. Switzerland. Oh, that makes sense. Okay. All right, cool. So institutional ownership's ticking up quick and short interest is dropping. I love all that every time I see it. I love the guidance here going forward. It looks, or the forecasting, it looks nice. Stock-based comp is turning into a small thing on their balance sheet. So they did have a tick down in revenue in Q4, which is kind of weird, actually. You'd think that shoe companies would do better then. But they did have a tick down. But yeah, let's see. Institutional ownership is decent. Insiders, they still own a lot of their stock. I like it when insiders have like at least a 20% or more percentage of the shares outstanding. It just lets you know that these guys have a vested interest in the success of the company. And I'll never hate on that, man. At all. That's cool. All right, let me take a look here real quick. All right, so once Google is... Okay, cool. Going down. So yeah, interesting. Oh yeah, and you know what? I didn't even look at. So they're a $10 billion company, but their revenues are not even at $1 billion yet. They did bring in 64 million. It's a high valuation. Forward PE is a little bit better at almost 40, but the PE is 116. So I don't know that I could say much about this from that level. And let me just pull them up as far as a stock goes too, because I want to make sure I bookmark that. So from a stock level, I'm willing to bet that it's done really well. And so this wouldn't be something I probably recommend as a buy anytime soon. Maybe just like a look at later. So it was down at 15 and it's doubled and it got up to almost 40. Again, just the valuation's high. 100 PE and plus for like a shoe company is like a lot. Any chance all right, let me see. Interesting that after I opened my Hood account, started getting snail mail offers from SoFi. Interesting, yeah. You know, they use all kinds of stuff like that, right? Like cookies on your computer to be able to figure out what you're doing, and then stuff gets resold based upon different companies that you work with. And then, of course, they're going to advertise based on that. That's a lot of what PayPal's plan is in the future, in the next couple of years, is to be able to use all the data that they have to be able to help people figure out advertising specific to like regional stuff and broader. It's brilliant, and they're going to make a shit ton of money from it, and it's not being valued appropriately, and PayPal's going to fucking crush it soon. But yeah, that same concept applies all over the web. Meta's been doing it really successfully for a long period of time. All right, Patrick Reddy, and again, so is Google and just a ton of other companies. Ego stock, please. EGO. Let's look at it, see what it is. I don't remember it off the top of my head. You guys give me some fun companies today. I'm excited. I'm really excited about markets, guys. I think there's so many good things coming right now. Oh, Q4 was screwy due to currency conversion. Oh, for On? Okay, that would make sense. They had some like weird currency issues. All right, so Ego up 32% revenue year over year. Novo alone stopped Denmark from recession in 2023. Really? Huh? I don't know a lot about that company at all. It's huge, especially for a company that's in Denmark. That's actually awesome. I'll have to get to know them better. So Ego though, Eldorado Gold Corp. Oh yeah, okay. Is this a small scale like gold miner? Industry Gold, Vancouver. A Canadian entity manages gold mining operations across Turkey, Greece, Canada. Those are pretty friendly places. That's probably good. Following its 2011 merger with European Goldfields, the company has focused on developing the Skouries, Olympias, and Stratinia mines in Greece. Okay, cool. Small gold miner. Yeah, that's probably going to do all right. It's kind of like the Bitcoin play, but with Bitcoin miners, but Bitcoin miners will do way better. They did dilute the shit out of their shares a couple quarters ago. Forecast is pretty good. I don't know, man. I'd be in Bitcoin miners. Like, they're going to do way better. That's my only advice there. Brian Tini, TDoc, won't Palantir Health make that irrelevant? It might, man. It's hard to know who's going to win in the future. Teladoc looked really promising. I think, yeah, I don't know. Palantir Health maybe takes them out. It's possible. It's one of those where I just want to keep an eye on the sector. And I love Palantir for like so many different reasons. Matenga, INTC, Intel dropping hard after earnings. Oh, really? I haven't been paying much attention to Intel. I just think that they're going to struggle. I think they're going to struggle. Yeah, here, let me pull up the stock too before I get into there. I think Intel is going to struggle because they're saying that they've got, you know, something to compete with Nvidia in the future. But I believe that more from AMD, not Intel. Yeah, so they're down another 7.8% after hours. That sucks for them, dude. Oh, like actually decent insulin prices. That's awesome. I already like Novo better than it's on my list, man. I'm excited to take a deeper look. You see, after I make just shit tons of money from asymmetric bets, I like to disperse that money towards companies that are making the world a better place and or that can be a great store of value. So it's one of those things where if it's kind of a steady eddy like that stock looks like that's something I wouldn't hate, right? When you can look at like a Novo in here, I'm going to jump out of Intel real quick. We'll see if we can look at like a visualization of their earnings in a second. But when you can find a steady eddy, oh, did I not save that? Let me see here. Did I already have it? Oh, there we go. Yeah, I did. Oh, I just didn't have it pulled up. But this is what I call a steady eddy, right? So if you look, it just keeps going. So it dropped in the pandemic. Is that even the pandemic time frame? No, that pandemic's over here. You can't even notice it. You can't even notice the pandemic here, guys. This is fucking nuts. So the pandemic is where? Is this it? Nope. Right here. So it went from 32.85 down to 25, and then it's went from 25 to 125. So that you could made an 8x since the pandemic off of this one. And again, it's just a steady grower. It might have a period, sometimes like 2008 to 2009. You might get a year where it has a break, or maybe like here it had a rough patch 2015 to 2019. But since like 2017, it's just up. It's just up. And I love that kind of stuff. And if it's a great company that's helping people at the same time and they can just keep going up, that's something I want to dial into. All right, let me see what else we got here. PayPal hiring process optimization engineers specifically in the Salesforce process. PayPal has completely revamped their C-suite. And they took silo stacks from completely different separate systems like Venmo and PayPal and just a bunch of other reporting aspects that were like all independent silos, and they already consolidated all their data. They're going to do massive advertising. They're going to have additional payment revenues coming in because they're doing a good job of getting themselves out there and making them one of the number one choices for buy now, pay later. If the economy doesn't collapse, PayPal is fucking doubling, and I make millions of dollars when that happens. So I'm ready for PayPal. Let's do it. Next Tuesday is going to be fun. I think that's when the earnings are. We already talked about Anduril. Let me keep going here. Let me see what else I got. TDoc, NVO. Sorry, I lost my place again. TDoc. X company, Anduril. Okay. Would love your opinion on ZS. Oh wait, there's another one right before you here. Hey Jesse, can you check BLDR and let me know what your thoughts on the holding? It's up about 300% since I bought it in 2021. I don't love holdings that are up that much. I'll tell you that. BLDR, just like as an opportunity, like I might be able to give you an exit, but I don't love it when they're up that much because it's like I already know all these other companies that I know are going to do really well, right? Now this company where was this? Where was pandemic over here? Pandemic was like non-existent for these guys. Was it over here? Yeah, right here. Okay. No, it was a big deal. 28 down to 9. Since the pandemic, bottom 216. 9 to 216. What the fuck? So that's a good 22x-ish. $22.59 billion. Let me just look real quickly and see what kind of revenues they spin off here. What was that? What was that one again? Damn it. Where is it? It just had it. BLDR. I gotta figure out this chat better. Or I need somebody to feed me chat. I don't know. Maybe I can automate it in some way to get like keywords so that I can make it more efficient. Builders First Source. That's why. Is this, it's a construction company. Is it residential? Or it's probably not CRE. Headquarters in Dallas, Texas. That's a great place to be too. Largest supplier in the U.S. of building products, prefabricated components, and value-added services and new residential construction remodel. So these guys have just done great. Now, these builders, here's my worry. Rates are going to start coming down soon. New home builders could do well for a while. Oh, thank you, Alex, too, for joining. They could do well for a while, but here's my worry. Once the existing home sales market used to make up, like, I want to say it's 75%. It's a big fucking number, right? And it's been frozen for a couple of years almost now because of the fastest rate of rate raises in the Fed's history. And so that's been frozen. But when rates start to come down, I think that starts to thaw. And so then I think we start to see some pressure where it starts to open up, and there's a rush of people that weren't willing to sell their homes and weren't willing to buy new ones, that all of a sudden starts to open up, and it creates liquidity in that market that it has not seen in a while. And so I think it could get really weird. So I don't know. I think these guys could get, some of their future revenues and stuff sucked out. Even though right now this PE is only 15 and the forward's 14, that's not horrible at all. And what are they bringing in? 350 million at the peak here, 900 million. So their net income's starting to drop. Their revenues kind of been dropping since 2022 as well. So that's probably why this PE isn't running higher, just because they went down a little bit. They've forecasting that they're going up a little bit, which is good. But I do see potential maybe for residential real estate construction to slow, or at least maybe lose some of the vigor and thunder behind it for like just real estate plays, right? That have been just devastated. Like all the realtor companies and all the Redfin and stuff like that. Like everything that's really been crushed by the existing home sales not going anywhere will get better. And so I think that that's where the focus is going to be in the future. And so I wouldn't look at holding that for a long period of time. That's just my take. Sarthak, I'd love to see ZS. I will pull that up real quick. Zscaler. Okay, cool. I don't know if I have this ticker or not. I'm just going to make sure I sell this other, or save this other one. Let me see here. So these guys, 35% growth, very steady revenue growth. Gotta love software. SaaS companies are so great. But no, the net income kind of sucks. But what are they making for revenue? 524 million with a 28 million bleed isn't really a big deal. Their cash position's still going up. They're still diluting a little bit. And they can do that. So wow, their EPS guidance is going super fucking positive now. But EBIT's still down and revenues are still going up. So we'll have to see how they land here. But I do like a lot of these ratios are going in the right direction. What are their insiders doing? I don't love that. Well, no, I guess it's low volume though. So they've been selling a little more than buying recently. They sold a lot in 2019. We're not really seeing anybody. So what this is telling you is the insiders either have a lot of shares already, or they just, let's see what their insider down here is. Oh yeah. They've got a lot. So that doesn't tell us much of anything. They have 38% of the existing float, right? So there's very little retail in here, and there's a decent amount of institutional at about 50%. So I don't care now that when you're looking at stuff like this, I would care if insiders weren't buying and they didn't hold a lot of the stock and they weren't buying, then I would be like, well, if they don't think it's undervalued, why would I want to purchase it? But they obviously don't even give a shit about that right here because they own so much of the company still. So they don't need to buy more shares, right? So that's why that number's low. And 26% stock-based comp of revenue, that's high. That's high. So I'd like to see, let's see if the net income is getting flat to up here because their EPS is guiding way higher. That would make me happy. Forward PE right now, it says is 54. So I'd like to see, for a $26 billion company that isn't making money yet, I mean, again, the revenue growth, though, this is why they're valued so high, because look at that growth. It is a parabolic increase. And when you have a SaaS company and you can do shit like this, it's just a matter of when do you turn on the revenue. And it looks like they're getting ready to do that, right? You can see the deepest troughs in 2022, and then they started going higher. And now they'll probably be half of this, maybe 101 million for 2024 at the rate they're going. If they are, and maybe it's less than that, maybe they're even positive for 2024. So if the net income goes from this all the way to positive, that's a fucking great sign. That's like a company that's like, yeah, we're ready to go mainstream. Let's get it done. We're going to be positive from here on out. And that's the kind of stuff you want to see. What are we doing? I'll probably go till 5 and then I'm out, guys. So about another 10 minutes. All right, Anduril might be super highly priced IPO since the media is in favor of it and praises it, unlike Elon's companies. I don't know if maybe. Yeah, that's possible. I would definitely, if I could get around like in the first draft, I would do that. I would definitely. I don't know how. Yeah, I don't know. I'd definitely love to get involved in it. If anybody can get me involved in some private round funding of Anduril, please get a hold of me. Derek, I don't know if you're on here. Yeah, I would love to. I would love to be in something like that. All right. Make fuel cells for forklifts. Ah, cool. Okay, that's interesting. Nice Smiles website, GDVM. I'll pull that up. You guys are giving me some interesting ones, though. GDVM. And I love, oh, let me see. I got to look up the actual stock here, it looks like. 1 second. Global development. Wow, that's really weird. I don't even know what the market cap is for this company. Yeah, I don't know what to say about this. Let me see global development. Let's see if he even has this. This is probably so tiny. Yeah, if you could let me know what the market cap is of that, or if it's a holding, or what it is. All right, Gary, Jesse, I've been watching the delta on our TSLS 3030 calls. It's been going up from 0.28 last week to 0.36 now. Another 100 increase in Tesla stock and or one contract will be greater than 30K. Any thoughts? I think we're going to make a lot of money off of Tesla in the next couple of quarters, in the next 2 years. So if I make too much money over a short period of time, I'm looking to sell some. But that's the first world problem. Otherwise, I don't really care. Austin, electric forklifts are a good value prop. Imagine having, yeah, there's another company I was looking at that actually does something like that. I don't know if it was the same one, though. No, it was a different one. I've got it on my list. I'll have to add that when I do a review of it. Wajtek, I think you just joined today, too. Thank you for that. Hi, Jesse. Can you take a look at NKLA? If that financials look like shit, but the institutional, if that's Nikola, oh, you're not going to like my answer, bro. Yeah, that's Nikola, dude. It's such a trash shit company. Just trash shit, fucking garbage. So that's about all I have to tell you. Any company that rolls a fucking semi down a hill and then says that it's in motion so that they can defraud investors is not a company you want to be invested in. I know Trevor Milton, is that his name? I know he's in prison or some shit now. Or maybe he's still trying to, keep himself out. I can't remember. It doesn't really matter. It's a shit company. Stay the fuck away from it. Just let it die. Just let it die. Some things need to die. Nikola can do that. They say their revenues are going up. If this happens, they might get to 47 million. What are they worth? 800. Oh, so they're not $1 billion. So that's better, I guess. But yeah, just stay away from the company. The entire business model is shit. Let's see, what is it? Nikola, I want to see if there's anything new here that says that they've changed their positioning. So they're not going to be able to compete against Tesla. I mean, they're just going to die. Yeah, just buy Tesla. Sorry, I want to be more optimistic, but I can't be. It's a shit company. Just stay the fuck away from it. Chris Cashman, NVO as a diversification choice, holding only Tesla. I like diversification. I don't know if NVO would be that for me. I'd rather own some Bitcoin miners. I'd rather own some ARKG. I'd rather own other things like all the stuff that I hold. Oh, and I've said this so many times in the last couple of weeks. I will update my portfolio tonight. I promise to God. So you guys can see what my allocations are, and that will include my shit coins and everything. And I give all the detail. I will show you the Excel sheet of how I'm positioned, what the contracts are for. You'll get everything, right? So I'll have that done tonight. Mohammed, thank you for joining. All right, let me see here. Scrolling down the list. Iron. I can look at Iron. I really shit on Iron a lot. Just because I didn't like the fact that they weren't holding Bitcoin. I think they're starting to now. I think it's a little late, but I know Mike Alfred is like on the board or some shit. That's mildly interesting. They're up 1.74%, $730 million cap. I don't know how to value it, though. Again, I love companies that hold Bitcoin. They're going to benefit from FASB accounting rules. These guys hold Bitcoin, but it's 1.3 million worth. It's 31 Bitcoin. I almost have that. Well, I can't say that. I don't disclose my holdings anyway. But yeah, they should have more. Let me just say that. They should have a lot fucking more. And I don't even think their goals are that aggressive. Look at this Bitcoin production numbers over the quarter. They barely made any. They lost what? They lost $5 million last quarter. It just sucks. I mean, like, I don't know why people like this shit. I don't get it. What are their expansion plans? Let's look at this real quick. Again, I just don't. Nope, not you. Let's go to Sebastian Ski. He's my boy. He does all the heavy lifting for this shit. If you find people that do all the heavy lifting and where you don't have to do all the heavy lifting, you find them and you utilize them. And so when people put in the level of work that my boy Sebastian has done, you don't do it yourself. Let's just put it that way. Come on, open up. No, is this the actual Excel? I don't want an Excel. I want the PDF. My bad. There we go. So, and this guy does the work. Just to be clear, he does the work. Now let me see. Let me do this. Let's see here. Are we looking up Iron? No, I just opened up like 20 Excel sheets. Nice. For Scientific, another shit company. Hype Digital, Hot 8, shittiest. Iron, here we go. All right. All right, so let's look down here. So their expansion plans up top, actually, let me look there first. Expansion plans are to get to 19.578 exahash in the future. I don't know exactly when that is, but that's okay. That's actually a decent amount of growth. Again, don't really have any Bitcoin. If we look down here at their equipment, this is another thing I care about, right? Like the miner speed. I want to see quick stuff. Now here, this is an area where they excel. They actually have 200 to 190 hash rate. All this 100 shit is pretty much garbage. So that's great, I guess. I don't know exactly when they're deploying all this stuff. And they're only like a $750 million company, so they could do all right there. But they would do so much better. Like, they need to deploy all their equipment soon for their expansion. They need to just crank that shit out as quick as they possibly can so that they're making money off of it, because they're going to need it. And they don't have any Bitcoin, and that's going to suck for them. And they're probably like decent diluters and everything else. I don't know, man. Like, I would pick Bitcoin plays over all this stuff in a heartbeat. Novo does fatness, anti-fatness, and diabetes drugs. That's great. It's all good. Ozempic. Oh, I've heard about like potential lawsuits or something for Ozempic, though, and just not great side effects. My wife and I have both tried Mounjaro. I think there's way less going on with that. That actually worked pretty good. The insulin play I like for Novo. Mine looking at ASAN. This is probably my last one. I think this is my last one. Unless anybody has a tip they want to throw out for something, I'm going to do this one and then depart. ASAN. I think I have this one already, but let me just see. Nope. Yeah, and then we'll call it, guys, because we did it. It was a good one. We did 2 hours. That's a lot. Did an earnings call, did a market recap, looked at all my stuff, pulled up a bunch of chart requests. That's a pretty busy 2 hours. All right, so ASAN. And again, the goal here is to, oh, and this is Asana. I used to use that product actually years ago. It was not bad. Lots of insider buying. Okay, cool. It looks pretty beat up, actually. That might be nice. Let's see. It's $3.3 billion market cap. Boy, did this thing have its glory days, though. 2021, right? Oh, yep. So 146%. So it lost 90%. That's cool. That's what happens. All these high flyers in tech, people get really excited and then they just get fucked. That sucks, though. When you lose over 90%, that's after the bounce, guys. After the recent bounce. So these guys are growing revenue. Here's the thing I don't like. Negative $62 million a quarter when you're only making 171. Lots of stock dilution still happening here. Now, you could say that they're buying, but are they really? I mean, it seems like they were in Q3 of 2020. Was that even a good time to buy? No. Oh, no, it was. Yeah, okay. That was a fucking great time to buy. They bought down here, and then they dumped on you fuckers up here in October, November 2021. Did they? No, same time. Weird. No, they didn't. They should have dumped. They should have dumped all the fucking shares. Anyway, so they're guiding towards better on EPS. They're trying to get to profitability. They're still seeing growth. All that's good, but it's the 30% stock versus revenues that just sucks. And a 14% growth isn't that great. I would own PayPal. That's my thought. If this thing stops looking like shit, let me know though. But for now, man, I don't see it, bro. I don't love it. Anyway, I think Jesse, every day for the last 2 weeks, I will update my portfolio. Yeah, that's fucking true too. It's totally true. Hippocrat. Sorry about that. Ask SMR about Nikola. He is not a fan. I think Nikola is just a shit company, dude. I'm sorry. And I can tell you, I spent a lot of time in research onto them so that I could determine how fraudulent they really were. And I've watched them afterwards too. And they're total fucking trash. Yeah, buy it, dude. If you love losing money and having people steal money from you, buy Nikola. I highly recommend it. If you just like watching it get burnt. Some people do, man. Some people like pain. You know, like the dominatrix thing. What you do, you. That's what I say. All right, so I will fucking update the portfolio tonight. You guys can mock the shit out of me tomorrow if I don't do it, okay? Lean in hard, I'm telling you. If I don't do it, Lucid or Nikola, both fucking trash. Both trash. Along with like every other EV maker outside of Tesla. Anyway, I think we're good, guys. I really appreciate all of you. You're fucking awesome. I think let's do this again tomorrow. I'm going to throw up my little logo thing, and then we're going to let Crypto Bubble play some music for us. Peace out. Love you guys. Bye.
What do you do with the Bitcoin besides it just gather value?
Real estate developers in New York City, they're not buying the real estate because they want to live in it.
But like most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor. Okay? Right, like, the point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right, but we can all look Bitcoin sort of as...
Forever, Laura. People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor. We call them poor. We call them poor. We call them poor.